As Charlie was just reading out some ugly numbers out there in the marketplace. One of the key things so far over the last 4 or 5 trading days has been up and down volatility here. We got the VIX out to 23.5. Anything above 20 kind of gets your attention here. Usually averages around 17, 18. So there you go. So let's talk to a professional who does this stuff for a living. Shana Sissel, founder and CEO of Banríon Capital Management, joins us here. Shana, kind of a wild few days here as the market tries to digest this new, I guess we call it a black swan, being Iran. How are you thinking about it? How are you talking to your clients about this?
So you've had me on here many times in the past, and I've always talked about how my biggest concern has been volatility in the first quarter of 2026, and our focus on alternatives and as a risk management tool has been the primary discussions we've been having since the beginning of the year. And it really works, and it has prepared our clients for the current market environment. They were planning for this, they were positioning for this, and so we just continue to have those conversations.
Shana, what about in the private credit space? Paul said that is one of your expertise. For instance, we have Blue Owl scrapping its merger after investor pushback. What does that say about the state of private credit today? Maybe we can start with that.
I think it is really a reflection of a rush to raise a lot of money by a few firms in the upper middle market of private credit. Some very large funds were raised in the billions of dollars. And when you have to put money to work, and a lot of money to work, you're inclined to possibly not do the level of diligence that you would normally do if you could be more selective about what you invest in. And we're seeing the results of that type of investing. And it's why I believe that, and I've said this before and I'll continue to say it, I don't think there's a systemic problem in private credit. I think there was a massive problem with a lot of money running into a specific area of private credit, which happens to be the area most likely to make the headlines, which is the biggest deals with the biggest companies. And that's what we're seeing. But if you go down to the lower middle market, you don't see the same kind of defaults happening at the same frequency, because lower middle market private credit lenders were substantially more selective in what they were investing in. They were able to be substantially more selective because they had a lot more deals that they could consider. But when you have to put a multi-billion-dollar fund to work and you got to do deals of $100 million or more, the pool of opportunity, of which there's firms out there looking to borrow hundreds of millions of dollars, is tiny. In our economy, 70% of all business is small business. And so that falls into the lower middle market. But where most of the risk is in the areas where a lot of money was competing for a few deals. And so they had to be a little more lax in the terms of those deals, which increased the risk of an event like this.
Shana, first of all, red headline crossing the Bloomberg terminal. Traders boost ECB rate bets. Now see 75% chance of a hike this year. We'll have more reporting on that. Shana, as you talk to your clients, is there what's the allocation you think is a reasonable allocation to alternative investments for, I guess, your average client, if you have an average or kind of a model client?
So we're a big believer in 20%. Anything more than 20%, you can start to increase risk in a way that takes away from fixed income's benefits from a risk return standpoint, because most of the time an alts allocation comes more from your fixed income allocation than from your equity allocation, just because you're managing risk with this part of the portfolio. Anything less than that, it's not going to make much of a difference in your risk-adjusted returns. So 20% is really the number. And I want to caveat that by saying, I don't consider private credit, private equity, venture capital, diversifying alternatives So when we talk about that 20% bucket of alternatives, we're talking about diversifying alternatives. And those are things like managed futures, global macro, long short equity, market neutral, real assets, even crypto. And I know that's controversial, but even crypto falls into that bucket. We're looking for things that have low to no correlation to traditional markets. And that is different than just being illiquid, which is what private equity, private credit, venture capital, they are alternatives because they are private and illiquid, not because they are diversifying. And so I just want to make sure that I stress that the 20% bucket that we recommend is in diversifying alternatives.
Shana, thank you so much. We appreciate that. Shana Sissel, founder and CEO of Banríon Capital Management, joining us there. I think what's one of the things that with this war in Iran